Gerald Celente's track record speaks for itself. He's been forecasting worldwide since 1980. No one has been so right on so many issues so often. He is the publisher of the Trends Journal, founder and director of the Trends Research Institute, and we would like to welcome back to The Real Money Show, Gerald Celente.
Gerald, welcome back to The Real Money Show. Great to have you again.
Oh, it was great being on with you guys.
We have a lot of new listeners, and we'd love to introduce them to the Trends Journal and what you've been doing and all of the things that you do. So can you tell us a little bit about the Trends Journal and how it's evolved over the years and some of the macro trends that you're currently watching?
Yeah, well, it evolved. We've been doing it now for 40 years, and it used to be a little 8-page newsletter, and now it's about a 50-page magazine, full color. And what we do is we look at the global economic, geopolitical, social trends around the world, anything from healthcare to whole health healing to cannabis to the equity markets and what's going on in the world from Venezuela to Iran, from Africa to Argentina. It's the only magazine in the world where you'll read history before it happens. Today's news is it's just a repeat of what's going on with no analysis and a lot of opinions. The motto of the Trends Journal is think for yourself. So what the Trends Journal does, it prepares people for the future, to prepare for the dangers and seize the opportunities. And besides the magazines, we do podcasts Monday through Thursday, Trends in the News broadcast on Friday, and trend alerts each week.
And in this past March issue, you were starting to get ready for 2020. And can you elaborate on some of the Institute's trend forecast relating to specifically, as you talk about in the journal, the $250 trillion debt bubble?
It's going to burst. And what's keeping the markets alive is the cheap money flow. It's monetary methadones just to keep the bull running, and they're addicted to it. So, for example, let's go back to last year, September 19th to be exact, 2018. We made a forecast. We called for an economic 9/11. We said the markets were going to go through a severe downturn. The next day, the S&P 500 hit an all-time high. And then shortly after, they started a steep decline, going into bull market territory, down some 20% around the globe and more. But that changed. The reason we made that forecast was because the Federal Reserve said they were going to be, quote, aggressive in raising interest rates in 2019. But on January 4th, 2019, when they came out with U.S. numbers of employment skyrocketed over 300,000 people. They looked at the wage gains for the year of 2018. They were the best in 10 years. So that meant the Federal Reserve should have raised interest rates. However, Jerome Powell, the Fed chairman, came out and said, well, we're going to be patient in raising interest rates because we're concerned about where the equity markets were going. And the Dow, for example, had its worst December since the Great Depression. So we changed our forecast. That's why I don't call myself a futurist. Nobody could predict the future because there are too many wild cards. And then we said there's going to be a Trump bump. There's going to be a market rally. And that's exactly what happened. The S&P 500 and NASDAQ in the end of April hit new highs because they're going to be patient in raising interest rates, more cheap money. So, going ahead, this is the presidential reality show in the United States, the greatest freak show on earth. What does Trump want? To get reelected. What's he going to do? Anything he can. He's in the real estate business. He wants interest rates to stay low. Anybody that doesn't think the Federal Reserve comes under pressure from the president has no idea of what's happened in the past and is ignorant of history. Because you go back to Richard Nixon, he pressured Burns, the Federal Reserve Chairman, not to raise interest rates before the election, and he didn't. And then read Paul Volcker's new book, The Federal Reserve Chairman under Ronald Reagan. He was brought into the office and told by James Baker, Reagan's chief of staff, as Reagan's sitting next to him, you have orders from the president not to raise interest rates before the election. what people need to understand is that you don't get to the positions in these Federal Reserve or any kind of course, it's not a government position, but a central bank position. But you don't get to the top of these positions without sucking your way up, meaning they take orders. And so the pressure from Trump throughout 2018, we believe, pressured the Federal Reserve not to raise interest rates. So going back to the 2020 election, we believe they're going to lower interest rates to keep the economy going, particularly if you see the equity markets start to decline, in which they're starting to do. This has nothing to do, by the way, with trade wars with China. All of the trade war pressure on China so far with the tariffs has amounted to merely 0.678% of China's GDP. The reason the markets are going down is because they're overvalued, and there's just a little fluctuation. We see the markets going higher as long as interest rates stay lower. But what we're looking at is at some point this is going to explode, and we believe the explosion is going to happen after the 2020 election when they run out of monetary methadone.
Darren has a quick question for you.
Well, I think that on the heels of that, it's a two-part question, Gerald. One, if we know interest rates are going to be low, what trends can the individual follow that might help them long-term, medium-term, might help to protect their wealth, grow their wealth? And two, you're leading into those types of protection. And obviously, you know from us and having had a relationship with you over the years, we love gold and silver, in particular, the physical kind. What does that tell us about how wealth is being protected around the world, especially leading to that next question about central bank buying? It's been very heavy. So two-part question there.
Well, the central bank buying, as you well know, it's at a 50-year high, and it's continuing because they know of this debt bubble. It's over $250 trillion. Do you know how much the Federal Reserve of the United States pumped into the economy to pump it up during the Great Recession?
Over $4 billion.
Yeah, and Bloomberg says $9 billion, but the Levy Institute at Bard College just came out with a study. $29 trillion. $29 trillion.
That must be under the books that they lent to other governments, right? Like, how did Ireland all of a sudden get to be able to buy all these U.S. treasuries and things like that?
Exactly. So what we're looking at, this debt bubble is going to explode. So what could the average person do? Of course, we don't give financial advice.
Of course not.
And we're trend forecasters. Mm-hmm. Speaking only for myself, I believe gold to be the ultimate safe haven asset. That's not unique. I mean, everybody that knows anything about gold believes that. And it's a hedge against what's going to happen. And that what's going to happen is going to happen. And there are the wild cards that are going to push it over. And one of them is the war heating up between the United States, Israel, and Saudi Arabia aimed at Iran. And the United States just sent a fleet over there, led by the aircraft carrier, the Abraham Lincoln, into the Straits of Hormuz. Suppose the Iranians said, we don't like what the Americans are doing, and we don't trust them around near Mexico. We're going to bring our fleet into the Gulf of Mexico to make sure that they stay in line. I mean, how long would we tolerate that? But the United States is ratcheting it up overseas. I mention this because going back to gold and making all things connected, we're looking at oil prices. Our forecast for oil prices is $80 a barrel as it exists now for Brent crude. The more money that goes into the gas tank, the less money goes into the cash registers. If violence breaks out between Iran, Israel, Saudi Arabia, and the United States, you're going to look at oil prices go above $100 a barrel. If that happens, kiss the global economy goodbye and the equity markets. Let's go back to gold, the dollar, and what's going on. The dollar is staying strong mainly because the other currencies are so weak. What's oil based in? Petrodollars. Okay. Wouldn't you love to be owning right now Turkish lira or Argentinian peso? That the Argentinian peso is down, some 55% already? And the Turkish lira is diving again, heading back towards its old lows? Take a trip to India with the rupee down. India imports only about 80% of its energy. Now they have to pay more as their economy is going down, their currency is going down, the dollar is going up, oil prices are going up. That's going to bring down the global economies. So again, you go back to gold. It's the safe haven asset in times of economic turmoil. And by the way, when you hear all this talk about the markets going down because of trade wars with China, as I mentioned earlier, watch gold prices. Gold prices should go much higher if there was really a fear of a trade war. So gold is going to be the indicator of where things are going. And that's the way we see it. And I've been making this forecast now for 6 years. Gold has to break over to 1385 to head toward 1450. 1450 an ounce is our breakout point for gold. When gold breaks over 1450 an ounce, we believe it's going to spike rapidly to over $2,000 an ounce.
And in terms of some other forecasts with the Trends Journal, are there things that you're looking at that you see really positive? Because, we've talked about, we're talking about a debt bubble and imploding and having an insurance policy for that. But I know that there's a lot of positive trends in the journal as well that you point to, specifically things like the entrepreneur section. And we'd love for our listeners to know, some of those trends that you can watch out for, or at least give them a sneak peek so that they'll say, I need that Trends Journal as well.
Well, we're looking at a lot of things, the alternatives for plastics. We're looking also at the whole cannabis industry. We were among the first in the Trends Journal a number of years ago. Our cover story was Reefer Money Madness. And I have to tell you, up in Canada, it's real. And it's happening in the United States and around the world. So this is just the beginning. And not only that, you're going to see more and more plant-based remedies in whole health healing. That's going to change a lot. Many people are addicted to pharmaceutical drugs. And what I keep saying is if the planet can feed us, can it heal us? And I believe it can. And by the way, I also have an honorary doctorate in complementary and integrative medicine from the National University of Health Sciences. And one of the first books I worked on back in the 80s was natural healing. So we do a lot in that field as well. The other ones to look at, too, the baby boomers. And I'm the first generation, the first ones out of the baby boomer thing after World War II. I'm born in 46. We're going deaf, blind, and out of our mind. And baby boomers are in very bad shape. There's going to be a huge market for this. And also, again, with longevity centers, with co-housing, on in many different fields. Matter of fact, remember all those McMansions that were built back in the 90s? You're going to start seeing a lot of what they used to call in the old days boarding houses, because a lot of boomers can't afford to live on their own. So these are some of the trends we look at. And also, again, going back to cannabis, the whole hemp industry is going to do a lot to replace plastics. So there are many different trends, whether it's artificial intelligence, to, again, whole health healing, to the economy, to geopolitics. It's all in the Trends Journal.
Gerald Celente, it's always so great to have you on the show. We're going to have links on our newsletter for people to get the Trends Journal. And again, always great to have you. Learned so much today. I have to check out that report about the Federal Reserve and how much money they actually injected into the economy. So great to have you, and we look forward to having you again.
And thank you for all that you do.
Take care.
Bye-bye now.
Bye-bye.